Welcome back. You're still watching Finweek Money Matters. South Africa is under pressure to cut its budget deficit and grow the economy. Will it be possible to kickstart domestic growth given the major challenges we face with electricity generation and with Parliament and organised labour in turmoil? Will investors steer clear until there is more political certainty? Well, in studio to discuss 2015 is Beaturie Gouws. He's the Global Mobility Services and Employment Tax Advisory at KPMG. And I also have Kristia van Heerded, online editor at Finweek and Jana Marais, the Finweek editor, still stays us in studio. Beaturie, let me please start with you before we start looking ahead to 2015. Tell us what were some of your key themes for this year.
Thanks, Jimmy. For me, there were three things I think that stood out. The first was the employment tax incentive that started on 1st of January. It's something that took a couple of years to get up and running, and it went through quite a couple of rounds between Labour and government. But I think now that it's gotten going, there's good uptake. Got about 260,000 employees, 23,500 employers that took it up. And that's basically in order to create employment. So it's an incentive to allow employers to then go and say, I can take another person on board. And if you combine that with a learnership and SETA skills training, you actually have a very good way to create a pipeline for your business. And eventually you then also kind of broaden the way that you can do business, meet your BEE requirements potentially, but most of all to create employment. So that was the first one. Second one is retirement reform. Now, I know it's been postponed, but it bears repeating that it's still something which is on the cards, and at this point is 1 March 2016. We will hear in about, I think, July 2015, whether or not it's going to go ahead in its current form, or whether there will be changes. And that is one of the things that I think, for me, I haven't seen employers do enough or educate people enough around that. I know the trustees also need some kind of more information on that and making sure that their members are aware. So I'm waiting with bated breath to see what's happening on that front. And then I think the third thing is the tax-free investment account that we're looking forward to in 1 March 2015. I know I say it's in 2014, but we're discussing it now, and this is something that I think we're working towards. So those in my field is kind of the three most important things.
Kristia,
would you mind elaborating a little bit about the retirement reform? What has been, first of all, what's involved exactly, and what has been difficult in the implementation?
I think maybe if I can break it up into two things. The first thing is that your contributions towards a retirement fund would now become a fringe benefit. So what does that mean for you and me? Well, at the moment, you don't see it on your payslip, so it's not taxable. And in that sense, your employer makes a contribution and you don't see it. It's kind of magic money that gets accumulated somewhere. And I think that's also the reason why it's quite easy for people when they leave a job to take the money, because they didn't feel the pain of putting it in, because they didn't actually see it. So now it's going to be a fringe benefit, but you're going to get a deduction also of your and your employer's contribution up to a certain maximum. And that is 27.5% of your entire remuneration, what is the higher of remuneration or taxable income, or 350,000. So what that would do is two things. First of all, it provides a cap, which is not currently in existence, on the high end of the contributions to retirement funds. So for example, if I contribute currently 15% of my entire income to a retirement annuity fund, say I'm not formally employed, I run my own business, 15% of 50 million, a lot of money. And at this point, there's a tax incentive for that. So that cap is extremely important. But at the same time, making this part of the system that people actually physically see the contributions going in, that makes the system a lot easier for people to see what's happening, because then you can align pension funds, provident funds, retirement annuity funds. If you want to explain to a person today, what are you contributing to? A provident fund. Okay, let me explain the tax to you. Pension fund, let me explain the tax. It's difficult. The moment that you have alignment, all of these three should look broadly the same. And that's where the Provident Fund changes come in. Provident Fund changes, currently, you can take your money when you retire, you can take a lump sum immediately, which is all nice, except when it runs out.
Tax-free if you take that lump sum?
No, it's taxable. Okay. It's taxable in its entirety. Whether you take an annuity or a lump sum, it's taxable. The lump sum is just taxed at a different tax rate. It simulates the tax on the marginal rate that you would pay on an annuity, but it's a different tax table. So the problem with the Provident Fund at the moment is people run out of money. So in order to align everything, now every person contributing to a Provident Fund, an individual, would also get a tax deduction, but similarly, when they take the money out, they would need to annuitize. However, in this particular case, in order to, and please note this is on retirement, and I'll get back why this is important. Because it's on retirement, people then need to purchase an annuity, but also they've planned, right? So you thought you were going to get a lump sum. So there's a very long sunset built in. So for people 55 and older, contribution to the retirement fund, they will not need to annuitize at all. People under the age of 55, they will need to annuitize, but only the money that they bring in after 1 March, whenever, at this point. And only to the extent that whatever that money is, plus the growth thereon, exceeds 150,000. So it's kind of a, if you say, how old is the youngest person in a Provident Fund? 20 years? About a 40, 50-year sunset. It's for government normally cliff edge. Today it's like this, tomorrow it's like that. It's a very long sunset. So that was brought in order to enable people to plan better and so on, and not to create too much of a disruption. The problem came in. People understood that this means pre-retirement, that the pre-retirement preservation is going to be changed. Now there's discussion on that, but it's not on the cards just yet.
Beaturie, how is this likely to unfold into the year 2015 as we look ahead?
Well, at this point, we're waiting for the decision around about July. In July, between COSATU and government, I think the decision will be made as to how this will go ahead. In the legislation, it says 1 March 2016. But the discussions will then decide whether it will go ahead as is currently the plan, or whether it'll only go ahead in 1 March 2017, or then if at all in its current format. Because Labour's concern, I think, on that point is Labour would like Social Security to be in before anything else happens on this front. Whereas I think from the other point of view, it's when you work with legislation, it's an incremental change. People need, if I can just take an example, we halted this whole process. This whole process in the country was halted because of a misunderstanding. It's not pre-retirement preservation which is being affected, it's retirement. And only for people long time into the future. So it's complex. If you want to change things, you don't do it overnight, you do it over a period. So I don't know to what extent it's possible to halt everything and to do one massive change as opposed to incrementally.
Let me just get a quick comment from you, Kristia, and perhaps Jana, before we wrap up. Fortunately, it seems as though we've really been going through this.
So the big thing for me, and the hopefully not incremental reform that I'm looking forward to in 2015 is the tax break on investments under 30,000 Rand a year. I am, as an investor, obviously very excited about that and hoping to see it not unfold over a period of 20 years if all goes well.
Well, I'm not such an optimist, I'm afraid. My concerns are more negative. I think for me, what I'm looking forward to getting information on is to see in the budget what, how they plan to balance the books, and if we'll see tax increases. And for me, retirement still feels a far way away, so I don't stress about it too much, which is obviously also a mistake on my part. But I mean, do you think we'll see increases in individual tax rates come the budget?
I think it's likely, unfortunately. I think for most people, that's the one thing that you very much look forward to around budget time, if you're not in kind of our fields. You want that little bit of change in your pocket, and the inflationary kind of increases usually mean that there's an adjustment. And in this particular year, where do you get money? Well, I don't know if we're going to see inflation adjustments, and there's a possibility because I've seen mentions in the medium-term budget of making the tax system more progressive. So, is there a possibility of a super tax? 42, 45%, people earning very high amounts.
I'll bet you that's a good place to leave it, because there is somewhat of a possibility there. Next year we'll see what the future holds. We're leaving this edition of Finweek for 2014 looking at tax. That's all for this week's edition and this year's edition of Finweek Money Matters. Thank you so much to our guests. That's Beaturie Gouws. And then let me just make sure I've got your title right. Global Mobility Services and Employment Tax Advisory at KPMG. And of course, we do have Kristia van Heerded, online editor at Finweek, and Jana Marais, a Finweek editor.